Okay, for some of you who are already trading in stock, it might be a repetition for you, but for the sake of the others, I'll go through the basics. Then I'll talk about the short-term strategies that work for me. All right. You might have your own strategies, or you can look at this and modify and create some things that works for you the best. But these are simplistic ones, simple rules that work for me. Okay. I'm sure it works for everybody, right? These simple rules and simple time frames of doing this works for everybody. However, the 4 criteria which I told you earlier remains to be. If you don't have or missing on one, I would suggest that again you relook at yourself if you want to get into a short-term strategy of creating your portfolio. You'd rather look at the long term. Again, that also has to show some of these 4 criteria I'm going to talk about. Okay, but these are where the larger compoundings happen, guys. Okay, so be very clear about that. This plays an important role in your larger compounding. And if you're completely, sure that this is not your piece of cake, which is fair, right? You might look at it from a distance over a period of time and then come into it. But if you think, then you'd rather give it to an expert outside who does it. But in any case, you need to know this, right? Because then once you're giving it outside as an outsourced activity, you will then know what to expect. And if it's not falling into your zone of, quarterly returns and others, you then want to take it back onto yourself and then working towards it. This is exactly what happened to me. Once about a year or so, I've had outsourced it because again, I was very busy with my other stuff. Once I realized that, it's not coming to the point where they're not even beating the Sensex, right? Maybe I want to look at it myself. And I started doing that. So over a period of some time, I could manage to do what I was expecting out of it. I spent a lot of time, by the way, okay? So hence it could be, I can show it to you in a simpler fashion that is actually happening now, right? So do that, but again, 4 criteria: patience, perseverance, passion, and discipline. If you don't have any of these, please go and get some, right? Read Higher Self, my earlier book, as I talked about. Go about doing some meditation, do something, right? So that you come into that zone of having this. And if you're not passionate about this, of meeting your goal at the larger end, again, you might take a back seat on this until you start at formulation, have that burning desire to do this. Because you, in the initial stage, if you're starting off new and you're not familiar with this, you will go through your troughs, right? You will go down, you will have some losses, you will not be clear. However, I showed the very easy ways of mitigating that, but it's human behavior, right, end of the day. So it's the mindset gig, which probably you would have had, because I'm assuming the Rise One played an effective role in your mindset. Now, financial assets play an important role accordingly, hence require the similar kind of mindset to get cultivated, for which I said the 4 elements, right? So keep that in mind. Now, assuming those are there existing in your system, what are the key types of trades that happen? Again, I'm getting to a very basic level here. There are 3 types of kind of trades in a short trading basis. Now, the reason I made short trade, because the long trade ones I will cover in the subsequent one. So the short trade consists of scalping, swing trade, and positional. Scalping is nothing but done over very, very short period of time, right? You take a trade, same day, close it, in another hour you take another trade, close it, etc. And this is the people who get glued onto the screen and keep on doing this, right? Works for somebody, doesn't work for me. I don't want to do it because I've never glued. I don't want to get glued, right? So, but there is a way of doing this. People, some of them just love it, okay? They cannot do the long-term ones. They cannot do even the short-term one. They want super short. This is that, right? So scalping is that. It's a super short way of doing things and quickly taking your credit and going away. Typically largely seen for forex markets or in a similar kind of commodities, or a short-term buy trade in maybe an option, an FNO kind of section, right? So this is that. Then there is swing trade. Swing trade is that it might happen in a day, it might happen in 2 days time, or it might happen also maybe a little more, maybe 2 days or 3 days, because a swing is happening. And for those who need to understand this better, every stock, right, when it goes through its cycles, it goes up, it goes down, it goes up, it goes down, right, over periodic effect. Some of them are, most of them are cyclical in process, and but while it's on its way up, it doesn't go directly up. It's not a steep slope straight away going up. It goes up, then comes down. It goes up until there are higher highs that they make, and then there are lower highs that they make, as they call it. Okay, so now once that swing is happening, there are criteria when you come to know that's going to happen. Okay, and I'm going to show you that. And then you can choose to do that. So your trade is anything between a day to maybe 2 days or maximum 3 days, and then you're out of it, because once that swing is over, now you know that's going to go down again. Okay, so while it's swinging, mind you, it goes up and down again, but you know after some time that's going to reverse, and that's when you get out. So that's a swing trade. Okay, and we'll again see it in details in the next one. Positional trade. This is something you hold on, again, positional could also mean that you can meet your exit strategy. That means that your goal to hold that position can happen in a day's time also sometimes, right? Because it hits upper circuit or whatever reason the news is, and the reason that you might be taking it for. So a positional trade comes from a small time frame. Typically, I've seen a week to a point of like a 3 month to a 6 month process. You take a position and you hold on to it until you meet your criteria and where it starts reversing through. So that's a positional trade, right? So 3 types of trades. Now you have to understand where you best fit in. Okay, swing and positional works good for me, besides the long-term portfolio, which is looked at a very different structure of sorts. Okay, now short-term strategy consists of 4 rules, right? We're calling it the MARBs. And you'll understand. I'll go into details. I won't spell it out right now, but we'll go into details in the subsequent one. And there's a 10-4 rule. What is a 10-4 rule? Right, as I told you, they go up and down. Sometimes it might not meet your criteria and start going down before it meets your target, the stock price specifically. So the criteria that works for me, and I've seen working repeatedly, is that whatever swing trade or a positional trade I take, I give a criteria with an exit of about 10%. That once I buy something at 100, I reach up $100 or 100 rupees or whatever that currency is. If it reaches 110, I exit out of it. All right, as simple as that. Now sometimes it doesn't come. Maybe it comes to about 8% return and starts returning down, right? Or it doesn't take, the trade doesn't go from that 100 value, it must start going down immediately for whatever reason, or some chaos happening somewhere, right? Which is not controlled by you. That might give you something like, it'll become 99, can become 98 and so on and so forth. So the maximum that I allowed is 4%, right? So that's the loss I can take, that's my risk. So against 4, I take 10% return, right? So it's roughly 2.5% if you see, as a risk reward as they call it. So my risk is about 2.5%, rather 1%. My reward is 2.5%. Clear? So that means 10% return against a 4% loss. So if there's a 4% loss, I immediately exit, right? For whatever reason, it could be at XYZ. That's the discipline. You don't do this, you get typically go through a loss sequence of activities, which then only compounds. So 4% when it comes down, I just get out. 10% I pyramid. What does that mean? I will come to the pyramiding rule. Okay, in a simple term, what it means is, after I reach my criteria and I see the stock still going very strong, then I put another level. So if I bought say 100 shares at $100 or 100 rupees, then I might buy maybe 50 more of those, right? And I start pyramiding it. That means 50, then if it's still going strong, I buy 30 and then 20, so that I am now mitigating my risk on the way up until the time it reverses completely. All right, so sometimes I do that. So so either a 10-4 rule or a pyramiding structure. So it either goes up and I pyramid. If it comes down, I just take a loss and go away, right? And mind you, I put at 10% also. If it comes below that, we come to 6%, I get out. Okay, because then could be any reason for that. But I do a technical analysis on that and so on and so forth before that happens. Okay, and my criteria is set. Sometimes the system automatically takes care of it. Okay, and we learn about that, how that works. So and besides, so there's something called price action. Price action is, what in simple terms what it means is, as I told you, stock move in a particular direction, it goes ups and down and so on and so forth. The higher highs and the lower highs, that means and I show you what it means. Okay, it's never easily explained. So when a stock goes up, it comes a little down, it goes up and comes a little down. It's going in a fashion where the triangle is getting formed, where the highs that were met, the subsequent high is higher than the previous one, and the lower high, right, is higher than the previous one. Okay, so a stock suppose from 100 goes to 101, then comes to 100.5, then goes to 103, then comes to 102.5, and so on and so forth, right? So it's making higher highs and lower highs. Now that's when one of the criteria of price action is. So it's showing that it's going up. You can also check this using indicators, that it's showing you the right way of doing things. And it's a deeper topic, and I will touch upon it in the subsequent one so that you get a practical view, but I'll go deeper in it during the rice circles for specific stocks. Okay, so let's see what consists of what goes into the areas that I mentioned in the next one. I'll see you there.